Hi stock investors, JJ here, welcome back. Well, Elon Musk buyout of Twitter, now X. The loans associated with that, there's news out today. It doesn't look like it's going so well. Look, here's the headline at the moment. Elon Musk's Twitter takeover is now the worst buyout for banks since the financial crisis, the great financial crisis. That's in the Wall Street Journal. Loans of around $13 billion have remained hung for nearly 2 years, bringing in interest payments weighing on banks' balance sheets. And we've got some video associated with that. Let's see what they've got to say, and I will comment on it along the way. In the Wall Street Journal, this is pretty public. I wonder what Elon Musk will say about this and what the banks will say about this.
A multi-billion-dollar loan from some of the world's biggest banks helped Elon Musk secure Twitter. But almost 2 years later, new data shows it's those lenders who are still paying the price. Deirdre Bosa has more in today's Tech Check segment. Deirdre.
Well, Sarah, the longer that these banks hold on to those loans, the more painful it is. And according to new data from PitchBook, the Twitter takeover now represents the worst buyout for banks since the 08-09 financial crisis. Holding on to those loans, on their balance sheets, that was never part of the plan for those 7 banks, which loaned Musk a combined $13 billion for Twitter.
There we are, 7 banks that have those loans on their books at the moment. It's taking a lot longer than expected. It doesn't look like it's going well. We saw that Elon Musk saying go F yourselves to advertisers, and now he's suing them. And revenue is estimated to have dropped at the company, the value of the company, of course, so things aren't going so well here.
The idea at the time was put up the capital, do a deal that deepens their relationship with one of the world's richest men, then turn around and sell the loans or bonds to investors. Many expected that Twitter's financials under Musk's control would improve, maybe even become worth more than the $44 billion total that Musk paid for it. Of course, that has not shaped up. Now X, the platform, has struggled to retain advertisers. And at the start of the year, you might remember this, it was marked down by more than 70% by Fidelity, which also participated in that 2022 acquisition.
Okay, that value there is of July 28, 2024, she said at the beginning of the year, but minus 71% markdown for X valuation. They were expecting the opposite to happen. Elon Musk is not infallible. There's a lot of people kind of worship Elon Musk and that he does no wrong, but perhaps blinded by the fact that everybody can make mistakes. Has he made a mistake here, and will he have to sell Tesla shares to repay or to come up with some cash for the banks here?
So the banks are left holding the bag, with paper losses, denting profits, increasing financial risk, and reducing liquidity available for other deals. Technically, these are hung loans. The Journal, which was first to report on the PitchBook data, put the Twitter deal in context to other buyouts and how long it took banks to offload that debt. As you can see, Twitter at the top there is by far the longest, with no end in sight. Now, ironically, guys, this has not hurt Musk's ability to raise even more money for his other ventures. VC firm Sequoia Capital and Andreessen Horowitz, they also helped finance that Twitter takeover, but unlike the banks that issued loans, they got ownership or equity, so they don't get interest payments, but it's also not burning a hole in their balance sheets, which also aren't reported quarterly.
Okay, so we've got here XAI's latest round, $6 billion from Sequoia and A16C, which this makes sense because Elon Musk got so many successful things, including SpaceX, perhaps the most successful, with Starlink associated with that, Tesla, X, and everybody makes mistakes. So, in terms of the US's attitude towards venture or entrepreneurs, it doesn't surprise me that one of them could go wrong at some point, and I think that they would think that too. So it doesn't necessarily mean the whole lot's going to come crashing down. And of course, AI is the hot thing at the moment, so he'd probably find that, well, he would have thought it would be fairly easy to raise money for that, and he was right.
Their higher risk tolerance, longer investment horizon, that's also more forgiving. So both Sequoia and Andreessen participated in that latest $6 billion funding round for Musk's AI startup, XAI. Still, that is not to say that there are not signs of strain, even for the VCs. Even that longer investment time frame is being tested. Data from Carta shows that vintage VC funds, they're returning significantly less capital to LPs than they have in years. 2 reasons for that: lack of exit, something we talk about often, and lack of realized gain. So even if they're not marking down Twitter or X on their books, they're also not realizing any gain from that investment.
No, they certainly aren't at the moment here. Let's look deeper at that. By the way, if you're getting value out of this episode so far, please remember to smash that like button to help the algorithm to spread to more people to find this channel, relatively new channel here. And let's get more into this. What do they say? This article in the Wall Street Journal, the hung loans have cut into some investment bankers' annual pay. Barclays' top investment bankers on the mergers and acquisitions team were told at a New York dinner early last year that compensation for everyone in the room would be cut by at least 40% from the prior year. Well, there's some people there that won't be too happy with Elon Musk because of that. The bank had several hung deals hurting its performance, but X was by far the largest, according to people familiar with the situation. Once bankers were paid their bonuses for the year, about 50 of the Barclays' more than 200 managing directors left the firm, according to the people. The banks early this year discussed a possible plan restructure. Plan to restructure the deal with Musk, where Musk could pay down some of X's outstanding debt and banks could agree to lower interest rates. People familiar with the matter said X didn't follow through on the plan. That's funny that Elon didn't follow through with that, although not surprising. He could come up with the money, as I said. He could sell Tesla shares. He did promise on an earnings call not to sell shares, I think, for 18 months to 2 years. He said preferably 2 years, which would bring it, in my recollection, up to beginning of 2025, so not that too long to go. So we'll have to see if that does happen, if he wants to raise some cash or has to raise some cash. The world's richest person, not incredibly cash rich that he can just come up with but he had to borrow this money, $13 billion, or he wanted to fund this deal, and it's not going well. So the $13 billion that Elon Musk borrowed to buy Twitter has turned into the worst merger finance deal for the banks. Since 2008, 2009. The 7 banks involved in the deal, we saw those before. Holding company and take a social media platform now named X private in 2022. Banks that provide loans for takeover generally sell their debt quickly to other investors to get off their balance sheets, making money on fees. She did say that, and that they haven't been able to do that because of the over 70% drop in valuations. And Musk has talked about how there's so much traffic there, it's going so well, but he has been tending to bend the truth lately. And so does anybody really believe that's true? That I guess Grok's come out on as well for AI, that's probably had a bump because people are wanting to try that out. What else do they say here? The banks haven't been able to offload their debt without incurring major losses, largely because of X's weak financial performance. Yep. Leaving the loans stuck on their balance sheets, or hung in the industry jargon. The resulting write-downs have hobbled the bank's loan books, and in one case was a factor that crimped compensation for the bank's merger department. Well, that's the thing about the dinner and saying people are getting paid less because of this deal. They will not be happy with Elon Musk about this. The value of the loans to Musk quickly soured after the $44 billion acquisition was completed, but new analysis shows how their persistent underperformance has put the deal in historic territory. According to the data from PitchBook LCD, the Twitter loans have been hung longer than every similar unsold deal since 2008-2009 financial crisis, for which the research firm had complete records. There were many more hung deals back then, but banks in the period typically were still able to sell or write off most of their hung debt within roughly a year after they issued the loans. All right, so what is going to happen here? This is going to be fascinating to see what happens for Elon Musk. And will he have to pay back money? Will he have to sell shares too? to pay back some of this money? Will the banks put pressure on to come up with the cash, or will he be able to do some dealing here to get out of it? It's going to be interesting to see over the next 6 months or so. It's definitely going on a long time, a lot longer than the banks thought when they ended less successful so far. I've seen investors say, Elon fanboys say that he's going to have payments on there and it's all going to be fantastic. But he has, it's not going as well as some other businesses he's had, and he was forced to buy it in the first place. What do you think? Let me know in the comments. And before we go, I want to tell you about ShareSite. I have got a deal here, special offer for my viewers here for ShareSite, which is a portfolio tracking and reporting tool platform that 400,000 investors trust over the world, including me. I automatically bring trades into there, and it gives the true performance of my portfolio. Go and see this video here to see a bit more about it if you want to. I will leave a link to that in the description. And thanks for joining me today. Thanks for your company, and I'll see you in the next one.